Hello, good afternoon to you all. I welcome you to the Starry Academy Live class. Today, we're going to be looking at three courses in one paper, for the CIS Level 1 candidate, which consists of our financial accounting and financial statement analysis. We have our economics and financial markets, and we have our quantitative analysis and statistics. So, as we posted around our platforms, we said that the class will be starting exactly 12:30, and it's 12:30 now. So, continue with me on this journey so that we can look into the topics in details. All right. So, like I said earlier, that the Chartered Institute of Stockbrokers, paper one, in which there are three courses in one: the financial accounting and financial statement analysis, economics and financial markets, quantitative analysis and statistics for the candidates who will be writing the September 2021 diet. So this live class is for you. And please note that this live class is not a substitute for you not to revise. You have to revise, it's just a way of brushing what you've learned so far and making you uh to revise more, So that's what this live class is, please. All right, so for every examination, there are set of guidelines and tips and tools that is needed to succeed in the exam. So apart from being prepared mentally, you have to be prepared physically by getting the right materials you need. So I'll be starting first by you to get set. For you to go to the farm, you need to get your cutlass, ruler, and every cutlass, hose, and every other equipment you'll be using. So for you to write your exam, you need your ruler, your biro, your examination docket, and your calculator. So the CIS examination involves a lot of calculation. I'm sure you are aware. So you need a calculator, a functional calculator, not just a calculator because there are so many calculators out there. So you need your Bible, your docket. It's very, very important to get all those ready. The second tip is to be mentally and emotionally stable. You know, the exam is already approaching. You don't have to say, "Oh, I'm going to read 48 hours." You know, you have to what? Be mentally stable. Sleep at the right time, even though you won't sleep 8 hours, but at least sleep and make sure you eat. Also, the next tip I'll be giving you is be 100% focused. I know it's very hard to be focused in this time or in this era where we are because of the constant notifications from our social media, from our friends, from Netflix, and every other channels where information are being shared. So you just need to discipline yourself. That's just it. Discipline yourself that, oh, okay, at least I need to stay away from these things, then I'll come back to it later. All right. So the next tip I'll be giving you is to believe in yourself. You know, you don't need anybody to tell you that you can do it before you start to make any efforts in improving yourself. So believe in yourself. You've signed up for this exam. You've paid all the necessary money. So don't dash CIS that money. At least believe in yourself that you can do this. What you know is enough for you to pass. But what you know is enough for you to pass the exam. So please, if you know you are not ready, try to what? To know more. Because if you know little, it might not even make you pass the exam. So you have to know the right things. You have to know the details things. And today we'll be sharing all that to us. Alright, so the next tip is to read all the instruction at the top of the paper. Attempt 4 questions out of 6. The many students out of excitement, they tend to lose focus on instruction. If the examiner says answer 2 and you answer 6, answer 4 and you answer the whole 6, then you might end up failing that examination. So instruction is key. Do not write your name, write your examination number. Do not write your name. So you don't have to say, oh, what if they can't find my record? No. Do not use pencil. Use biro. Use biro. You don't have to use pencil. So and every other instructions, everything will be explained inside the document. The next tip I'll be sharing with us is to identify 3 questions you know best. Start with them. First impression matters a lot. This is very, very important. For students who are very confident about a particular topic and you find out that that topic came out in the examination. So one of the best thing you can do for yourself is to what? Is to try and ensure you try to attempt the questions you know best. try to attempt the questions you know best. Alright, so the next tip I'll be giving us is to ensure you attempt all the 4 questions. It doesn't matter if you start from 1, 2, 3, 4. You can start from number 4 if that's what you know. You can start from number 3 if it is number 5 you know. Do number 5. It doesn't have to be serial, but the most important thing is what? Ensure you attempt all the 4 questions. So this is the tip. Alright, so the next tip I'll be sharing with us is to ensure you start a new question on the first page. The many students will say, "Oh, I don't want to waste paper." No, it's not your paper. You paid for the exam, so you don't have to be concerned about whether you're wasting paper or not. Even though it requires you starting a new questions on the first page, it is not wasting paper, so that the person marking the exam will know what to look out for. Once everything is jam-packed and everything is just folded together on one sheet, then even though you are correct, the examiner or the person who will be marking the exam might not even be interested in looking at your paper because everything is what? Chunked up. So you have to ensure that for question 1, try it on a new page. Question 2, a new page. Question 3, like that, till you answer the 4 questions. Okay? Alright, so that's that on this. So the next tip I'll be giving to us is to ensure we give straight to point answer in the examination. Once the examiner says define financial statement analysis, you don't have to tell them the history of financial statement analysis. Who cares? Nobody is interested in knowing the history. So just keep that knowledge to yourself. You can apply that wherever you find yourself. But the most important thing is what? Follow the instruction, straight to the point. Merits and demerits of ratio analysis. You just have to what? Give them the merits. The following are the merits of financial statement analysis. Number 1, number 2, like that. So you don't have to what? Be beating around the bush. Go straight to the point with the exam. Alright, so the next tip I'll be sharing with us is to ensure you give relevant examples where necessary to buttress your point. For example, if the examiner says, what is ratio analysis? I'm giving an example under financial statement analysis. So you can now start that, as defining what ratio is. You can now give them the types, and you can now cite examples of ratios that are applicable to entities, that are making profits, non-profit making organizations. You can cite various examples of ratios just to buttress your point. That's the difference between defining something and what is something. Alright, so the next tip I'll be sharing with us is to note that whenever you are calculating in your calculation, always check the accuracy of the figures and the formulas. I would advise students, once you get your answer or examination sheet, any formula you still have within you that is still fresh in your head, you can just write them somewhere. Not taking a paper into the examination, but you can just jot them down maybe by one side of your paper, then you can strike it off later. So it's very important you do that, because the tension in the examination might make you forget all the formulas you've memorized. So it's very important you note them down somewhere, then you come back to it. Do not take any paper into the examination, or I repeat. Alright, the next tip I'll be giving to us, which is very, very important, is for every examination in life, time is very important. Even life on earth, time too is very important. So you have to ensure that you manage your time extremely well. The paper is 3 hours. How do you want to structure these 3 hours? Break it into chunks. You have to answer how many questions? 4 questions, 3 hours. Then what you can do is, what if you say, okay, per 1 hour, I will use 40 minutes. Say 40 minutes for one question, 40 minutes for another questions. So between a span of 3 hours, you're done. So if you spend 40 minutes on a particular question, 40 like that, or you spend 35 minutes, then the other balance should be used to review what you've done and also to check whether you've inputted all your details. It's very important to note all this. All right, so to attempt the 4 questions out, to attempt 4 out of 6 questions, you have to know that section A is compulsory, which is what? 40 marks. Section A is compulsory, which is 40 marks. And section B is 20 marks each, whereby you will need to attempt 3 questions out of 5 questions. It's very important you are aware of all this before you start your examination, because you won't go there with any surprises. All right, for those who will be doing this level, the competence that is required of you is your ability to be able to analyze and interpret data and information. Now, that's what is needed for me at this stage, because you'll be given a lot of financial data uh, and every other kind of data to ensure you pass the examination. Okay, so I'll be sharing this guide with us in the 3 hours examination time allocation. So your reading and planning is for 15 minutes. Okay, reading and planning. So you can see that there was no mark awarded to reading and planning. It's up to you how you are going to read and plan yourself in the exam. All the maximum time you have is just 15 minutes. So don't waste your time planning without writing anything. It's very important you note this. All right, so the second guideline, which has been stated there, is that your question 1 carries 40 marks. You can imagine you have to spend a lot of time to actually unravel the questions that are provided at this stage, at this level. So please, it's very important to manage our time. Manage your time efficiently. 40 marks is a lot of marks, which I won't want you to play with. Then question 2, you can use 35 minutes. Yeah, 20 marks, 25 minutes, 35 minutes, 35 minutes. So at the end of the day, you have to set aside at least 10 minutes to review what you've done so far. And your review starts from what? From the very first page, where you are checking your what? Your examination number. Okay, so when you start to check your exam number, it starts from there. So don't just review your answer and solution. Review whether you've inputted the right details, because if you input the wrong details, then you have a what? A wrong score in the exam. So please, it's important we take note of all this. All right, so all what we've given us at the beginning of this live class is just an introduction of what is expected of you for the exam. Now, let's go into the course proper. Let us start the class. You can click on share to have a copy of this on your timeline. Also, you can share it to your Facebook, your Instagram, your Twitter, or whatever platform where you can share this knowledge to, so that students out there can know that, oh, Starry Gold actually does a live class for students, and so it will reach as many students as we can, you know. So please try to share this to your WhatsApp, your Facebook, and every other social media platforms that is going to add value to this. All right, so if you are just joining the class, our main stream is actually the Facebook. So I welcome you to the class. You can just type hello in the comment box, and also you can like our page and share our page. All right, thank you for doing that. And if you have any questions, please drop it in the comment box. For those who will be on Facebook, I think you have more access to this. So drop your answers at the comment box. Thank you. All right, so we'll be starting quickly with the first course in financial accounting and financial statement analysis, which is the first live questions we'll be looking at. So we have some series of questions for us, and I'll be explaining what they mean and how we can actually resolve it. All right, so the first question here says, the primary purpose of financial accounting and reporting is to A, advise directors, B, satisfy stewardship and accountability responsibility, C, aid decision making and good management, D, all of the above. So we need to ask ourselves, financial statement, financial accounting and financial reporting. Who needs them? Remember, we have two users of financial statements. We have the internal users. Please take note of this. And we have the external. So the internal users are, for example, we can say the employees of the company, we can say the shareholders, we can say the directors of the company. These are internal users of financial accounting and financial reporting. So for external users, people that are not within the entity, but they have an interest in what you do as a business. For example, your customer is also one. Also, tax authorities is a form of external user of financial accounting information. So, look at this question. Primary purpose of financial accounting is to what? Yes, it advises directors, because who are directors? Directors are internal users. Satisfy stewardship and accountability responsibility. Yes, this is actually a function of the shareholders. The shareholders wants to know how the directors have utilized the assets and liabilities of the company, so they will give account of stewardship, because the shareholders actually appoint the directors to manage the business on their behalf. So you have to give a report of what you've done so far. And also, financial information actually aids decision making and good management. So from these, you can see that primary purpose of financial statement is what? To advise directors, to satisfy stewardship, and also it helps in making good decision. So the correct answer for this question is all of the above. Option D is the correct answer. So please, for those who will be joining, any option I tick red is actually the correct option. So I'll just be doing some explanation around what you need to know around the question. So we won't just be answering the question, option B, option C. No, that's not how we add value. All right. I hope that is very clear. All right. Thank you. So the second question we'll be looking at is, which of the following is not an asset in the books of a sole trader? A, goodwill, B, prepaid rent, C, stock, and D, cash deposit. All right. So before you answer this question, I just want to explain something to us. Who is a sole trader? Who is a sole trader? Remember, we have various forms of business, right? Forms of business. The very first one is what? Sole trader, which we all know as what? One man business. Everybody knows this. One man business. So it's just a one person. He bears the profit and loss himself. He does not have large employees. He might have maybe just one employee. It's just a one man business, and it's prone to a lot of effects and some benefits as well. So also, we also have partnership. I'm sure all of us know this. Partnership is an agreement whereby two or more people come together to actually set up a company for the purpose of what? Of making profit. Sole trader makes profit, partnership makes profit. Then another form of business we have is what? The companies. The companies. And for companies, there are two types. We have the limited liability companies, and we have the public listed companies. So you can see that there are various forms of business. The basic ones which you need to know as a student is, you have to know that sole trader exists, partnership exists, and companies exist. So now let's go back to the question. A sole trader does not involve any complicated accounting system. When I mean accounting system, the way he keeps his records is it's very small. So it doesn't involve large transactions, journal entries, and the likes. So goodwill. When you ask yourself, what is goodwill? Can anyone just comment in the chat box? All right. So I'll explain this now. Goodwill is actually what? The intangible asset that is associated with the purchase of one company. So let me just put it in a simple form. Goodwill are intangible assets. For example, if you have good customer relationship, good relationship with your customer is an example of goodwill. So is goodwill a type of asset in the books of a sole trader? No. Goodwill is not an asset in the books of a sole trader. What about in a partnership? Yes, goodwill exists in a partnership. Goodwill exists in the companies. But a sole trader does not keep a complicated accounting system. His accounting system are just small, which does not involve large transactions. Prepaid rent, yes, a sole trader pays rent. For example, you pay rent for 2021 year. So you paid from January to December. So the portion which you've not used, for example, we are in the month of September. The month of October, November, and December is your prepaid rent because you've not used them and you've paid it ahead. So stock, yeah, these are the inventories you kept that you use for your business. It's an example of asset a sole trader keeps in his book. Cash deposit. There's no business that doesn't run without cash. Even Dangote Cement runs with cash. So every business runs with cash. Businesses runs with stock, and rent is an example of an asset in the books of a sole trader. Why goodwill is not an asset in the books of a sole trader? Please take note of this. Option A is the answer. For those who will be joining, option A is the answer. All right. So the next question which we'll be looking at is, which of the following is not a source document for the preparation of financial account for a business? Which of the following is not a source document for preparation of financial accounting for a business? A, we have sales journal. B, we have credit notes. C, we have trial balance. And D, we have sales invoice. All right. So the very first question I will ask you is, what is source document? Or what are source documents? So source documents are documents that contains the details of what? Of the business transactions. Details of business transactions. So for example, if you sell an items, yeah, you record it in your sales journal. Credit note is an example of source document. Trial balance is not an example of source document. Trial balance is an example of an account that is prepared after extracting the information from your ledger. It has various stages. Let me start with the stages. I need to explain this very well so you guys can understand it well. Source document, I don't want to feed you with answers. I want you to know how to answer the question yourself. So from your source document, you transfer them to your what? To your general ledger, individual ledgers, sales ledgers, purchases ledgers, asset ledgers. Then from your ledgers, you go to your trial balance. Look at that stage. It's very important to know the stage, the workflow of accounting system. Then from your trial balance, you flow down to what? Preparation of your financial statement. So you can see that stages, how it flows. So source document starts from where? Is the source. Then to your general ledgers, to your trial balance and your financial statement. So an example of source document is sales journal, credit note. Trial balance is not an example of source document. Trial balance is an account that is prepared after extracting the information from your source document to your general ledger. I hope that is very clear. Okay, so let's move to the next question. All right, so question 4 says, which of the following is not a reason for depreciating non-current assets? Which of the following is not a reason for depreciating non-current assets? A, passage of time. B, evaluation. C, wear and tear. And D, obsolescence. All right, so the very first question you ask yourself is, what is a non-current asset? A non-current asset is an asset that is held in a business for more than 12 months. Assets that it cannot be, that you can use it for a period of more than 12 months. You don't use it for trading. It is not for trading activities. So non-current assets, because you'll be using them for a very long time, you need to depreciate them. So one of the reasons why you depreciate is passage of time is a reason, because as you use it, the asset, for example, your mobile phone, you bought it in 2020, right? You've used it over time. Depreciation is being calculated on it. So evaluation, when you revalue an asset, you do not depreciate it. What does evaluation mean? Evaluation mean, for example, you have an asset. that you bought for 3 million naira. All right. So and you've used it maybe for 2 years. You now want to revalue that asset and say, oh, I think foreign exchange prices have changed. Let me revalue this asset. So if you revalue your asset, let's say for example, to 2 million, you've not depreciated it. Evaluation and depreciation, they are two different items. Depreciation is an expenses. Evaluation can actually be an expenses, or it can be a gain or a loss. So one of the reasons for not depreciating asset is what? Evaluation, option C. Wear and tear actually means using it constantly, the asset will fade out, right? Obsolescence, yeah. So after long usage, the asset will go obsolete. So the correct answer is option B, evaluation. I hope it's very clear. All right, so we'll move fast because we don't have much time. Question 5, which of the following errors will not affect the balancing of the trial balance? Which of the following error will not affect the error of trial balance? A, error of principle. B, error of commission. C, compensating errors. And D, all of the above. All right, so the very first question you ask yourself is, what is error of principle? Error of principle simply means the amount, you enter the right amount into a wrong class of account. So when you enter the right amount into a wrong class of account, then error of principle is said to come in. All right, so the next one is what? Error of commission. Error of commission is actually a type of error that occurs when an accountant records a debit to a wrong account. You know, for example, the amount you are supposed to debit, you went to credit it. You see that it will what? It will affect your trial balance, you know. So the next one is compensating error. Compensating error is an error, you know, from the word, when you mean compensating, please 1 second. So if you use an as, and for example, you have 1,000 naira as an asset, and you also have another 1,000 naira as a liability. You know, asset and liability usually net off to give us 0, right? So you now posted liability into asset and asset into liability. Eventually you will get 0, but that's a compensating error. You will get the same answer, but you've actually netted them off in the wrong sense. So all these would actually affect your trial balance. Error of principle, it will affect your trial balance. Error of commission affects trial balance, and compensating error also affects your trial balance. So in the real sense now, all of the above errors affect your trial balance. Okay. All right. So the next question is question 6. Maikudi income statement shows the sales of 1 million naira. Okay. So let's quickly do this. There's no time. We have less time with us. 1 million naira. So cost of goods sold is 400,000. So cost of sales is 400,000. Okay, so we have what? We have 600,000 naira. With interest operating expense of 300,000 and an interest expense. So Maikudi interest coverage is closest to A, 2 times, B, 3 times, C, 4 times, and D, 10 times. All right, so the very first question you ask yourself is, what is interest coverage? Interest coverage ratio is a ratio that is used to calculate, that is used to measure how a company would pay its interest due on the loan it has borrowed. So, okay, so your interest coverage ratio, let me just put the formula here. I'm coming, let me just clean some of these items here so we can actually calculate it because we don't have much time on our side. Okay, all right, so interest coverage is calculated as your profit before tax all over interest expense. So your profit before tax all over interest expense. Okay, so your profit before tax, what's our profit before tax? We have our sales of 1 million naira and our cost of sales of 400,000 naira. So getting that, you get 600,000 naira. So this is what? This is your gross profit, right? Exactly. So interest and tax. This is your gross profit. So to get our net profit is gross profit minus, they said there's a pre-interest operating expense of 300,000. So 600,000 minus 300,000 will give you what? For my mathematician student, that's 300,000. Okay. All right. So this is our what? Our profit before tax. Remember, our interest coverage ratio is what? Profit before tax divided by interest expense. When I make profit before tax, I make profit before interest and tax. So we'll now say 300,000 divided by interest expense. What's our interest expense? 100,000 naira. So that is what? 3 times. You can see that our interest coverage ratio is what? 3 times. Option B. All right. So let's move. The next question is, what is the effect of undervaluation of closing stock in the income statement of any organization? So if you reduce your closing stock, what will happen to your income statement? Capital will be understated. No. Net profit will be understated. Correct. Net profit will be overstated. No. Expenses will be understated. No. I will explain. Okay, so a quick one. When a closing inventory is what? Is undervalued, it has some effect. So one of the effects is that it will decrease your gross profit. Please take note of that. Because in calculating our gross profit, we'll say revenue less our cost of sales. We get our what? Our GP, which is our gross profit. Sorry, I'll be using some acronyms. Revenue in the exam, please write them in full. Revenue minus cost of sales will get our gross profit. So that's a decrease. It will decrease your gross profit. Eventually, if your gross profit is decreasing, automatically your net profit will decrease. So that's the effect of undervaluing your closing stock. All right, so the next one is which of the following ratios is used to measure the effectiveness of a company resources to generate revenue? So gearing ratio is actually a ratio that is used to calculate uh, how geared a business is, whether they don't incur so many debts. Asset turnover is a ratio that is used to calculate how well a company has utilized its assets to generate revenue. So the correct answer is option B. Quick ratio is a ratio that is used to measure how well a company can utilize its cash to actually settle some short-term liabilities, while gross profit margin is calculated as the percentage of our gross profit in relation to our what? To our revenue. Okay, so the correct answer is option B. All right, click on share to have a copy of this on your timeline. If you're just joining, I welcome you to the class. If you have any comments, please throw it in the comment box. All right, thank you. Question 9, we move quickly. In preparing financial statements, accountants should normally assume that an entity would continue in business into perpetuity without any factor that would force the business into liquidation or make it to curtail its scale of operations significantly. Which of the following accounting concept is applicable? Consistency, going concern, accrual, historical. So when you mean consistency actually means that in preparing your financial statement, you have to be consistent. with the method that you are using. So it's just all about you being consistent about the kind of method you're using to prepare. For example, if it is your accounting policy that you're using to prepare a financial statement. So we all know going concern. Going concern is actually what? It's actually a concept that states that an entity will continue to operate in the future. So you can see that it is correct, option B. And please note that this is usually disclosed in the financial statement. All right, so accrual concept actually entails you recognizing revenue when you did not receive cash. At the point of the transaction, record your revenue. We also have cash basis of accounting. So the cash basis is actually a system whereby revenue is recorded when cash is received. But accrual takes otherwise. It says revenue is recognized when earned. Okay? So please take note of that. Very, very important. Historical cost is actually talking about the past information which we use to prepare our financial statement. Okay, exactly. Most especially a balance sheet. All right. So let's move to the next question. Question 10. Which of the following characteristics least likely contribute to the reliability of financial statement? Which of the following contributes to the reliability of financial statement? A. Substance over form. B. Comparability. C. Prudence. And D. Completeness. All right. When you talk about the characteristics of a reliable financial statement, it has to be what? When you want your financial statement to be reliable by users, it has so many forms. But the best substance over form, no, this is not the correct answer. I'm going to explain that. Comparability, yes, comparability is the answer. I'm going to explain that. Prudence concept, no, complete. All right, so let me explain this briefly so that we can understand this. So substance over form actually means the difference between the commercial substance and the legal substance of a transaction. What does that mean? So I just want to form an example. Okay, when you disclose a particular information, when you disclose the information in a financial statement, it must represent the legal source. That is, your disclosure should be legally backed. You don't just assume and just disclose anything. While comparability makes your information is the ability of a financial statement to be compared over a certain period. So you can compare. For example, one of the standards that actually makes financial statement to be reliable is the IFRS. With the advent of IFRS in Nigeria, if they ask you when did IFRS became operational in Nigeria, it became operational in year 2012. Take note of that, students, for the purpose of the exam. So it is the International Financial Reporting Standard that integrated into the Nigerian operation to ensure that financial statement of a Nigerian company can be compared with a financial statement in China, as long as they are following the same principle in what? IFRS. So comparability actually makes it easy for you to rely on the financial statement. Oh, it's based on IFRS. That means I can compare it with any financial statement across the world. So that's the correct answer, option B. Please take note of that. All right, thank you. So this is a quick one. We're going to look at this together. All right, so this is the theory aspect of the exam, and we're given a financial statement of a company for 2 periods, for year 2011 and year 2010. We're given our asset and liability. This is a statement of financial position, which we all know. Okay, please hold on. All right, and we're also given an income statement for a particular period. We have to calculate the following ratios. Like I said earlier, the competence required for every student at this level is analytical and interpretation. For ratio analysis, you must be able to do two things. One is what? Calculate the ratios, which is very important, and also interpret the ratios. If you calculate and you don't interpret, well, the examiner might give you, let's say, 5 marks for calculation and 10 marks for interpreting. So the real marks for ratio analysis comes from interpreting the financial statement, the ratios you've calculated. So how do we do that? I'm just going to give us some tips on how we can go about that. Okay. So the very first one we'll be looking at is our current ratio. So we have to move very fast because we have less time. The class is going to end. So current ratio, in brief, measures how well a firm utilizes its assets to meet its short-term obligation. How do you use your current assets to meet your current liabilities? That is what current ratio talks about. And the formula for current ratio is what? Our current assets divided by current liabilities. And all these informations have been provided in the financial statement above. So let's go back to our financial position. What's our current assets? We have a current asset of inventories 700 plus 300, that's 1000, plus cash. That gives you a total current assets of what? 1250. So what's our current liabilities? So let's go back to the question. We can see 600 plus 20, that's 620, plus 50, that is 680. We also have a bank overdraft. So our total current liability is 1810. So let's go back to the question. So our current assets, as we calculated earlier, is what? 1250. Please confirm that. And our current liability is what? 1810. So if you divide this, please bring out your calculator. When I mean calculator, I mean a functional calculator, not just any calculator, please. Okay. So current ratio is actually 0.69. 0.69. Well, it's tried. Well, so the basis is ideally in interpreting a ratio, a good current ratios start from anything from 1 to, let's say, 1.5 or 2. So ideally, so that means the company has that is 0.69% usage of its current asset in setting its liability. Well, that's an average performance. You can call it an average performance. It's not poor and it's not good. It's an average performance on the part of the firm. So that will form a basis of interpretation. Please take note of that. All right, so let's move to the next one, which is our net profit margin. All right, so I'm going to create a new page now. Please hold on for me, just 1 minute. Okay, please hold on. Okay, so our net profit margin. I'm trying to create a new. Okay, please give me 1 second. Okay, so let's quickly move that. So our net profits margin. So our net profit margin is actually calculated as our profit after tax. After tax. Profit after tax divided by our revenue. So in the question, you see that our revenue was given, right? So you're going to compute that using this formula. So while the next one is our cash ratio, we have our cash ratio. Cash ratio is calculated as what? Cash and cash divided by our current liabilities. So these are all basic ratios. We need to go and look them. No cramming. It's They are basic ratios that is expected of any analytical student writing this exam. Okay, please 1 second. So our next calculation is our working capital. So working capital is actually the capital we use to finance our business on a day-to-day basis. So and it's calculated as what? Our current assets. These are basic ratios expected of every analytical student. Current assets less current liabilities. Then the last one is our what? Our gross profit margin. This is the same as our net profit margin. So basically, it's just saying your gross profit divided by your revenue. Okay, so that's basically the formulas for each of these ratios. They are just basic. They are more than this. We have our investors ratios. We have a lot of ratios we need to note. So for the purpose of the class, please let's go back to our ratios and try to brush them up. We might not say the examiner might set out something out there for the exam. Okay. All right. So click on share to have a copy of this on your timeline. Like I said earlier, your Instagram, your Facebook, your Netflix, your WhatsApp, share a course. If you're just joining the class, you're welcome. You've not missed because you can actually replay the video after the class. And if you have any question based on what we did in financial statement and financial statement analysis, financial accounting and financial statement analysis, please drop them in the comment box. All right, so we'll be looking at another topic because we don't have much time and our stated time would end by 2:30. So economics and financial market is another section for the exam. So please, I want you to sit back, get your writing materials, and let's start this together. For the purpose of economics, you need to have your writing materials, you need to have a calculator. So we'll be looking at some questions and some guidelines on how to answer them. All right, so the very first question on my screen, which I can see clearly, is in the equation GDP, C plus I plus G plus X plus M minus M, which the M is the import and X stands for what? Export. So M are subtracted from other types of expenditure because A, imports reduce national welfare. B. Other countries do not import goods from the US. C. The value of import is included in other components of spending. D. The value of import is difficult to determine due to the fact that they are frequently stated in foreign currency. Hmm. Alright, so this question is a question on national income. So national income is a section of the syllabus that deals with macroeconomic issues. Macroeconomic issues. I repeat, any situations, any issues that has to do with the nation at large, national income actually comes in place. All right, so like I said earlier, that we'll just be looking at them briefly. So our C, which is the consumption, plus I, investment, G, government spending, plus our exports. Our exports actually relates to the activities we carried out with our nation. What do I mean? We produce an item in Nigeria, we ship it out to other countries. What does that do, what does that mean to our country? It means it's an income. Why that's export? For import, it's actually more it's usually costly and it involves outflow, payment. That is why we are deducting the imports. So option A says import reduce national welfare. That's actually wrong because sometimes you might be importing a particular goods to produce here in Nigeria. So are you telling me that Dangote cement has all its raw materials here in Nigeria? No, there are some things they import from other countries just to add to what they produce here in Nigeria. So and it's going to improve the country. 90% of the Nigerian population uses Dangote cement. So is that reducing national welfare? No, this is not the correct answer. So the next is other countries do not import goods apart from the US. This is totally wrong. We import from China and some other countries of the world. The value of import is included in other components of spending. Exactly, yes. This is the correct answer. See, because when you import, you're actually spending money. Take note of that. And it's another component of spending on its own because you have to go through a lot of process to ensure you get the imported goods into your country. So it's another form of spending. That is why we are deducting it from our national income. And the last one is the value of import is difficult to determine due to the fact that they are usually stated in foreign currency. Well, it's actually not difficult because there's exchange gain on that or exchange loss. So and our CBN, the Central Bank of Nigeria, has actually dealt with this aspect of foreign currency, banning those illegal sales. So it's not an edict for the students. The main concern is what? Import and spending. And that's the correct answer. All right, so the next question quickly. Question 2 says, which of the following is considered the most important function of central bank? Who is central bank? At least for every student, you know that central bank is what? Is the apex bank. Apex bank. When they mean the apex bank, it is the largest banks that controls all other commercial banks in Nigeria. And it is the only bank that actually what? Supervises the activities of government. It's it regulates the activities of every other bank in Nigeria. So it is one. And also, please note that one of their most important function is what? No other bank can actually produce money. You know, supervising commercial banks is one of their basic functions. Controlling the money supply through monetary policy. Yes, this is the correct answer, option A. Why did I say so? Because no other bank has that regulatory capacity to supply money in Nigeria, as the case may be. So that basic function is unique to central bank alone. They supervise commercial banks, but that's on an ordinary level. It's not very important. They supply the economy with paper money. It's not really important because we even have fake money everywhere. They provide for collection of checks. Well, commercial banks do the same too. They provide checks. But the most important thing is what? They control the supply of money. Question 3 says the velocity of money measures A, the amount of spending in the economy, B, the average number of times the currency is spent on new goods and services in a year, C, the relationship between the value of money and the price level, and D, the relationship between the money supply and interest rate. Alright, so when you see this kind of question, you ask yourself, what is velocity? I know we are not science students, as the case may be, but when you hear the word velocity, what comes to your mind? Movement. You know, something moves around. Something moves around. These are technical terms we need to take note of. Common sense. With common sense, you can answer this question 3. So let's do this together. So the velocity of money measures, that is, when you spend money, when money is being moved around. Because if money is moving around, then that means you're actually spending it on something. Yes? Okay. So the amount of spending in an economy. Hmm, because you can't measure everything that is being spent in an economy. There must be a particular thing that you are measuring. That's one of the principles of measurement. You can't measure everything. Measure what is required. So option A is very wrong. Option B says the average number of times the currency is spent on new goods and services. Exactly. From this statement alone, new goods and services, what are they measuring? They are measuring what you are purchasing year in, year out. Common sense. With common sense, so you've answered this question already. So, my students, please, it's very important we try to think outside the box. The correct option is option B. The relationship between value of money and price level. Nah. The relationship between money supply and interest rates. No. Does not talks about it. It's totally indifferent. Alright, so question 4. If a 5% increase in one goods results in a decrease in 2% in the quantity demand of another goods, then it can be concluded that those goods are what? A, complement, B, substitute, C, independent, and D, normals. This is actually a question on demand. When you mean goods are complement, I'll give you an example. Goods that you use them together. For example, cylinder and gas is an example of complementary goods. So if the price of gas increases by 10%, you see that people will not patronize cylinder anymore. What do you want to use your cylinder for when the price of gas is high? So please, it's important we need to note all this. Substitute goods. For example, I'll give you an example. Then for my example, you answer the question yourself. So we have Milo and let's use, I don't want to use, okay, let's use Bonfita. So you can see that these are substitutes, goods that if there's an increase in price of Milo, people will want to Bonfita. Oh, you cannot afford Milo. Milo is expensive now. Independent, goods that stands on its own, you know, there's no association with any other goods at all. An example of that is, let's say an example of independent goods. We can say wood is an example because it stands on its own. And normal goods are just the normal goods we purchase on a day-to-day basis. So if the price of gas increased by 10% or 2% or 5%, then the quantity demand for cylinder is going to reduce for that particular time. So these are complementary goods. An example of complementary goods, another example is you can say pen and book. Yeah. So option A is the correct answer. Alright, so click on share to have a copy of this on your timeline. Like I mentioned earlier, if you are joining us, type hello in the comment box, and if you have any question, please throw it there. And don't forget to share to your friends, your family, your loved ones across board, whether they're in the UK, United States, or wherever they may be. share this. Starry Good is an online platform. Anywhere you are in the world, you can access our online session where you benefit from our platform. So share it across to your family, your friends, across board. All right, so we're going to continue with the questions. Question 5. If a nation had a balance of payment surplus, an exchange rate floated freely, the foreign exchange rate for its currency would. So a balance of payment surplus, what does it mean? That is the value of your imports. So when we talk about balance of payment, if the balance of payment is a surplus, that means our what? Our export is greater than what? Our import. But if it is a deficit, because it can be two form, that means your what? Otherwise, your import is more than your export. In this scenario, if your export is more than your import and the exchange rate floated freely, what will happen is what? Export will increase and import will decrease. That is a lie. It can't be possible. Option A is actually wrong. I will explain why. Because anytime you have a more export than import, and the foreign exchange currency has actually floated freely, that is easy for everybody to access, then export will no longer increase again. What would happen is imports would take the lead. Imports would increase while exports would decrease because people will want to, oh, let's take advantage of the foreign exchange rate. I hope that is clear. So option B is the correct answer. So fall, its export will decrease and an import will decrease. No, this is wrong. Fall, its export will decrease and its import would increase. No. Imports would increase while ensuring that the foreign exchange rate for its currency would actually what? Rise because your export is more than your import. Okay, so the next question, question 6 says, for a market outcome to be efficient, A, marginal cost and marginal benefit must be zero. B, there can be external benefits but no external cost. C, marginal benefits and marginal cost must be equal. And D, total benefit and total cost must be equal. Okay, so for a market outcome to be efficient, you need to note that two things must be in place. It's either you are making profit in that market or you are improving on a margin basis. That is, on your marginal basis, you are actually improving. So in this scenario now, if your market is to be efficient, two things come in place. Sorry, please hold on. One is your profit, and two is your margin. If your profit is not increasing, then your margin has to what? Improve. So if marginal cost and marginal benefit it is zero, then you are not making any any advantage. You are not being efficient. So this is wrong. Two, there can be external benefit and external cost. There's no how you have an external benefit without incurring external cost. For example, the United States government offered Nigerian companies maybe an incentive. So for you to take advantage of that incentive, you have to incur some cost. So wrong. Like I said earlier, market will be efficient based on two things: your profit and your margin. So if your marginal benefits and marginal costs are equal, then you are still on average. Yeah, that means you are being efficient on the marginal basis. Option C is the correct answer. Option D says total benefit and total cost must be equal. This is totally wrong. Because if all the total benefits you make, all the income, and your costs are equal, then you didn't make anything. So for you to be efficient based on two things, your profit and your margin. If you are not improving on a profitable basis, try to improve on the marginal basis. And if your marginal cost and marginal benefits is the same, then you're actually efficient in that market. Question 7. Which of the following will cause aggregate consumption spending to increase? A. An increase in disposable income. B. An increase in price level. C. An increase in interest rate. And D. A decrease in expected level of future income. Alright, so when we talk about aggregate consumption spending, as actually what it is being used to consume on an aggregate level, from that word consumption spending. As users, as customers, or let me say consumers, you spend on a daily basis, right? For example, maybe you earn a salary, and what will cause your spending to increase? If your income is increasing, then you'll be spending more. It's very clear. You earn let's say for example, you earn 100,000 naira in a month, and you pay tax. Let's say you pay 15,000 naira tax. Then you have 75,000 naira. So tell me, once they increase your salary to 150,000 naira, what would happen to your what? To your spending? It would increase, and your tax is also what? Increasing. So what will cause spending to increase is when your disposable income. And what is disposable income? Disposable income is the income minus, that is your income you are earning, minus the tax. So I'm coming, let me just put it here. So your income minus your tax is actually your what? Your disposable income. So if your disposable income is increasing, then your spending will increase. Option A is the correct answer. An increase in price level. This is very wrong. If they increase the price of goods and services today, the spending will reduce because your income is not matching with your what? Your expenses. If the interest rate increases, it will affect a lot of things. So you can't improve your spending. If there's a decrease in future income, then you will spend less today because you are afraid that tomorrow the money might not be enough. So the correct answer is option A. Alright, so the next question. The next question is, which of the following would cause a shift to the right of the investment function? A. An increase in interest rate. B. A decrease in expected profit. C. An increase in taxes. And D. An increase in capacity utilization above 5%. Alright, so please hold on. So permit me to say this. When we talk about investment function, we are talking about an interest rate relationship. I'm going to draw a table for us now. Okay. Okay. So investment function is a what? It's an interest rate relationship. And when I mean relationship, I don't mean a relationship between humans. I mean relationship between variables in an economic terms. Okay, thank you. All right, so this is the function. I'm coming. Let me just put it here for our view. Okay, so this is our y. So y stands for what? Interest rate. Let's just put it this way. And we have our x. X stands for what? Our investment. And this is our O, the equilibrium. And note that this, so interest rate 1, interest rate 2, investment 1, investment 2. Okay, so they said which of the following would cause a shift to the right of the investment function? Like I said earlier, an investment function is a what? It is a interest rate relationship. So if your investment function is actually shifting to the right, like this, it's actually shifting to the right. So does that mean that what? Your interest is actually increasing? No, you can see this is a downward slope. This is a downward slope. So to make it shift to the right, then an increase in interest rate. No, the increase in interest rate will only be applicable the lower the investment, the higher the interest rate. So this is wrong. Please hold on. A decrease in expected profit is actually will not cause an investment function to shift. An increase in taxes will not cause the investment function to shift to the right. An increase in capacity utilization above 85%. If your capacity to invest more increases, then it will actually what? Shift it to the right. For example, this is the investment function, right? So let's say this starts for 10, 20, 30, 40, 50. When you shift your investment capacity or you increase the capacity above 85%, that means you are creating more room to engage more investment. So it will now go 60, 70, 80. What's happening is actually growing, and shifting to the right hand side. So an increase in your capacity utilization would make your investment function to shift to the right. Okay. All right. So the next one is to be classified as financial intermediary. An institution must A. Collect funds from savers and control the money supply. B. Accept deposits and make loans. C. Pay interest to depositors. And D. Make loan but leave the acceptance to deposits to others. All right, so this is a very quick question which I want us to look at. So when you talk about intermediary is just like, let me say this is the customer. I just want to explain it in a practical term. Customer, and let's say this is the bank. So in between the customer and the bank is who? Is the intermediary. And you can see in our daily situation now, most of these big banks, Access Bank, they all have agents. Does the agent actually perform the core banking functions? No. The bank will actually maintain its core areas of what? Granting loans, financing, equipment, and all other core areas of the banking operations. But the intermediary will just perform the basic functions that would meet the needs of day-to-day customers. For example, you want to withdraw, I want to deposit, I want to I want to deposit, I want to collect fund, maybe very small funds, not big funds. So what they will do is what? The intermediary will just act as a link between the bank and the customer. They are providing services to the customer, services like maybe you want to withdraw, you want to deposit money, and those basic transactions. But the core banking operations still lies with the bank. Please don't get me wrong. The first answer says control funds and control the money supply. This is very wrong. Money supply is actually the function of who? The Central Bank of Nigeria. The second is what? Accept deposit and make loan. Exactly. A financial intermediary, for example, could be an agent of a bank. A financial intermediary could be a bank itself. What do I mean by that? Uh, it can be in a situation of the government and CBN. The bank of the federal government is Central Bank of Nigeria. A commercial bank can act as an intermediary between the federal government and the Central Bank of Nigeria. So when you accept deposit or you are making loans, you are acting as an intermediary between two parties. If you pay interest to depositors, it's not your function as an financial intermediary because that's not what is expected of you. So make loans, but leave the acceptance of deposit to others. No. To serve as a financial intermediary, you must perform those two basic functions, which is what? We are making loans available and also accepting deposits. Option B is the correct answer. The next question says, deficit spending by the government is best described as A. Expansionary fiscal policy, B. Contractionary fiscal policy, C. Expansionary uh, monetary policy, and D. Contractionary monetary policy. This is very easy. The first thing you ask yourself is, what is deficit spending? You know, when you talk about deficit spending, it means that if the government borrows more funds to actually finance some of its spendings, then that is a deficit spending. For example, expenditure is greater than your income, or you say revenue. So you can see that if your expenditure is more than your income, then that's a deficit spending. That means you have to borrow more money to finance some of those things you've spent for. And that's an example of what type of fiscal policy? Expansionary. So that's an example of expansionary fiscal policy. Correct. So option A is the correct answer for the question. Alright, we just need to move fastly because there's not much time. Alright, so the next question says, which statement best completes a short definition of economics? When you talk about economics is the study of what? A. How business produce goods and services. B. How efficient the use of scarce productive resources. And D. Equitable distribution of society income and wealth. And D. Printing circulating money throughout the country. The correct answer is what? According to Leon Robinson, it says economics is the what? Is the study of the efficient use of scarce productive resources in utilizing it to actually provide the wants of the people. So option B is the correct answer for this question. Alright, so let's move to the next. So quickly, we'll be looking at the theoretical aspect of the paper, it says, what is the difference between economic profit and accounting profit? And the next question says, GDP in an economy. Okay, so let's take it step by step. Like I said earlier, this is a revision class. It is not a substitute for you to say, oh, I don't think I need to read again. Please, it's an opportunity for you to say, oh, I think I've not learned enough, and you need to go and study more and go and do more of revision. So please, this is a revision class. Take it very serious, and please, once you are going through this, you will discover that, oh, I think I need to cover a lot of things. Don't cover a lot of things, cover relevant things. Go back to the syllabus, check those areas that the examiner actually highlights as the most important. Make sure you complete those areas and go back to other areas as well. So you need to study smart at this time, because this is not the time for you to study everything, but study what is relevant. Okay? Alright, so let's start this quickly. So the first question, I'll just start this one, question 1, and this is question 2. Okay, so let's start. Question 1. They say, what's the difference between accounting profit and economic profit? Okay, so let me just do a diagram. So basically, I'll just be explaining the key concepts. Please ensure you read in details more about this. Thank you. So once you remember those keywords, then it will actually be helpful wherever you find yourself. So accounting profit is actually what? Our net income for a company, which is what? Revenue minus expenses. So accounting profit is calculated as what? Revenue minus expenses. While economic profit is actually similar to accounting profit because it includes opportunity cost. The only difference between one of the difference between accounting profit and economic profit is what? Economic profit has an element of opportunity cost, while accounting profit does not. What it does is just what? Revenue minus expenses, and that's all. And that's all. So the next difference which I'll be looking at is accounting profit includes explicit costs. So there's an element of explicit cost, explicit. So what's an example of explicit cost? An example of explicit cost is, for example, raw materials. The wages you paid, raw materials, these are examples of explicit cost. While economic profit is actually an implicit cost. Implicit cost. And what's an example of implicit cost? Can have implied or imputed cost. So it's just very important to note that economic and accounting profit, they are actually the same, but they have some unique differences. One of it is that what? Accounting profit is calculated as revenue minus expenses, while economic profit is calculated as total cost minus total revenue. Then it has an element of opportunity cost, which makes it different. Accounting profit is explicit in nature, while economic profit is implicit in nature. Accounting profit is the revenue, you can say it is revenue less explicit cost. Just basic things. Why economic profit is actually the revenue received in excess of what explicit cost, opportunity cost. So basically, there are no major differences in this. You just have to understand the basic principle. From your knowledge of accounting, you can be able to differentiate between both. Oh, in every my economic profit, I need to do this. Oh, economic profit, accounting profit. Oh, it's calculated as my trading income. Every other information, you need to take note of that. Okay. The next question says, national income. So let's create a new space for that. So please hold on. Let me create a new space for our next topic. Okay. So the question says GDP in the country is 3.452 billion. Consumer expenditures are 2.3 billion. Government purchases are this, and gross investment is 379 billion. Compute net export. From our knowledge of account economics, we're made to understand that in getting your GDP, GDP is what? Consumption plus investment plus government spending plus open bracket X, which is export, minus M, which is import. So our GDP now is so let's go back to our question. Our GDP was given as 3.452 billion. Our C sorry was given as 2343 billion. Our I is given as 865 865 billion, exactly, not million. 865 billion. And we also have our G, which is government spending, to be 379 billion. Wow, this is a lot of money. I hope you all can see that money. All right, so this is a lot of money. So we're given our, so we should calculate our net exports, right? So our M was given in the question to be, let's check. Okay, net exports. Net export actually means our export minus import. So the M was not given. So X minus M will now be equals to make X minus M our net export to be subject of the formula. So if this one is going out, based on mathematical rule, GDP will come in. GDP is a positive, but it will now become a negative. GDP minus, it's always important to open brackets, C plus I plus G, close the bracket. So X minus M is called net export. Our GDP was what? 3452 minus our C, which is 2343, plus I of 865 plus G of 379. So that was going to give us 3452 minus. So let's punch our calculator and see what we have as our solution. So that's 2343 plus 865 plus 379. So that gives us 3587. So therefore, our net exports will now be 3587 less it from your 3452, and we have 135 billion. Remember, it is in naira and also in billion. 135 billion. In the exam, if you stop at saying I got 135 without putting any billion sign or naira sign, the examiner might look at you and say, I don't know what this guy is doing. He got the right answer, but I'm not going to give him his full mark. So please, it's important to try to note that. It's important we try to note that. It's very, very important. Okay, so I think that's all for that question. Alright, so click on share to have a copy of this on your timeline. You can copy the link, paste it on your social media platforms to make sure that everyone benefits from the class. If you are just joining the class, I welcome you to the class. Type comments, type your comments in the chat box, and also like our page, share across to your family and friends, your loved ones, your well-wishers, even to your enemies. You can share them too. Alright, so the next phase of our course is to look at quantitative analysis and statistics, which we are going to be looking at 2 questions on this. Hold on, let me create a new page for each of those questions. Okay, so I think we're ready to go because our class will be ending by 2:30. So we just have 30 more minutes left to unravel this topic. Alright, so our quantitative analysis and statistics basically talks about our ability to interpret financial and possibly non-financial data. What do I mean by that? That's where we have our concept of probability, we have our statistics, we have our measure of central tendency, where we have our mean, our mode, and some other calculations. Basically, this course actually has a lot of calculations. I would say, from my experience, 70% calculation and 30% uh, wordings. So let's say knowledge base, yeah. So technically, it has 70% calculation and 30% knowledge-wise base. Okay, so the first question on our screen says, explain briefly the concept of time value of money. And second question says, find the expression for dq all over dp for the supply function q is equals to p2 plus p plus 1. What is the coefficient of determination measure? Alright, so let's start with the first question, which talks about the time value of money. So, this is a section under mathematics of finance, in which we need to note very, very seriously. Time value of money, as we all know. I'll start with an example. For example, let's say you invest a sum of 10,000 naira for 1 year at, let's say, 5%, or let's say basically 10%. Yeah. So you want to place this money in a bank account as an investment, or maybe an investment option came across. And when I mean investment, I'm not talking about Bet Niger investments. Those are gambling, those are not investments. When I talk about investment, I'm talking about real investment, investment in real estate, investment in stocks, shares of companies. There are couple of numbers of investment out there, not Bet Niger, not all these gambling sites. So please, it's important we know the difference between gambling and investments. Okay. So you invested 10,000 naira 1 year at 10% interest rates. So at the end of the year, the bank now gave you a sum of what? 11,000. What happened to that money? You see that that money has changed over time. In 2020, you invested 10,000 naira. At the end of 2021, you collected 11,000 naira. That shows that something has happened over time. That is what we're trying to explain. How the value of money changes over a certain period of time. So I'm just going to explain it shortly now. So the time value of money is called TVM, time value of money. So, can you please hold on? So time value of money is a concept that explains how money changes over time. And time value of money is the same as net present value. Net present value, NPV. You'll be hearing of NPV a lot. That's actually what time value of money actually entails. So, and in explaining time value of money, because the examiner says briefly explain. So that means we've given an example. You won't talk about time value of money without mentioning the concept of inflation and so inflation and purchasing power should be taken into consideration. Alright, so the time value of money, as the examiner has stated, we defined it as the rate at which money changes over time. And we also said that the net time value of money is also referred to as net present value of money. Then we now also said that inflation and purchasing power should be considered when investing your money. When trying to invest any amount, you have to consider inflation and purchasing power, because inflations actually reduce the value of money. Purchasing power, on the other hand, it will actually reduce the value of money, because if you don't have enough means with you, then how do you want to purchase? So it's important we take note of all this. So these are the two areas. So let's quickly look at the second one. Basically, it's just theoretical, nothing serious about that. Okay, so B aspect of the class. So the second question says, find the expression Q is equals to dP for the supply function Q is equals to P square. Okay, the question is actually a basic question. They say we should find the dq. Okay, we are being asked to find the dq all over the dp of P square plus, when I mean P square, I don't mean P squared as things, so P square plus P plus 1. Please take note of that. So in finding your it's more like integration, trying to get your integral value of this equation. So they've given us this equation and said, okay, candidate, find the dq and dp of this equation. So what you do, the principle of integration is what? Your coefficient will actually become what? The variable. So it is like this. So dq of dp is what? 2p 2 minus 1 plus any variable you have that doesn't have any standing coefficient. Then it will lead to what? It will turn to 1. Okay? So any number you have, if you want to do the dq and the dp, then it will turn to what? To 0 plus 0. So that gives us what? 2p plus 1. So that's all. It's just a basic question. It's just a basic question. Like I said earlier, this is just a revision class. This is not a substitute for your learning. It's just to remind you of what you need to know as a student and the areas you need to work on, so as to add value. We may be given another expression as, we say, find dq all over dp of, they might say, p4 plus p3 plus 2p. In this scenario, what are you going to do? As a student, we all know that the rule is that any coefficient will be deducted by 1 and it will come forward. So therefore, it will be what? 4p, 4 minus 1 is what? 3, plus 3p, 3 minus 1 is what? 2, plus, remember we said any alphabet that is being differentiated will actually become 1. So that's the 2 what? 2, 1. So that will be what? 4p square root plus 3p square plus 2. This is our final answer if you are to do that. For example, another scenario, if you are given a question like, find the dq and dp of p plus 1. So if you are given find the q and the p of q plus 1, then you know that what? The answer is automatically 1 plus 0. So that is 1. Take note of that. Very key. So the next question actually says, what does coefficient of determination measures? Coefficient of determination. All right, so let's quickly look at that because we have less time. Don't have much time. Coefficient of determination So coefficient of determination now is recognized as R square. So coefficient of determination is actually used to analyze how differences can be explained. I'm going to explain this by a difference a second variable. Okay, so I'm going to explain this now. Coefficient of determination is written as r raised to the power 2. Then it is a tool that is used to analyze how differences in one variable can be explained by a difference in a second variable. So, and it has some basic steps. I'm going to give us an example on this. So the steps. So the first step in calculating coefficient of determination is what? The first step is to find the correlation coefficient. Okay. So for example, the formula is this. It's actually a long one, but you're gonna be fine. So you just have to put it in your head. XY close bracket minus summation X close bracket summation Y. It's actually an easy formula. You don't need to cram anything. Into square root open bracket n summation X square minus summation X all squared close bracket. Open your bracket again and say n summation Y square minus open bracket summation y close bracket all squared. Then close your ultimate bracket. Bam. That's all. This is the formula for calculating your correlation coefficient. So once you've calculated that, the next step now is to what? Is to square the correlation coefficient. Square the correlation coefficient. We're going to give an example for this. Don't worry. Don't be scared, okay? The next step says you should convert the correlation coefficient to a percentage. Okay, so these are the basic 3 steps you need to take note when calculating a coefficient of determination. Is the first thing is what? You need to calculate it first by using the formula I outlined there. So then you square the correlation coefficient, then you convert the correlation coefficient to a percentage. A quick short example to illustrate what we just said right now before we move to the last question. Okay, so for example, let's say you've calculated your R correlation coefficient to be what? 0.543, right? So step 1 says what? Calculate it. You've calculated it. Step 1. So step 2 now says you should what? You should square it. So you now say what? 0.543 square is going to give you what? So use your calculator to do this. Two nine five. So then our step 3 will now be to what? Turn it to percentage. So in turning it to percentage, that will be what? 29.5%. I hope that is clear. So the first step is we calculated. For example, it was given to you in the exam or in your question. The next step is for you to what? Is to square root it. Then the third step is what? Turn it into percentage. Then you're good to go. So please read more question on that topic, as the examiner would might likely to use some of those in your objective choice questions. Okay, so the next on our list says we're given a table of 100 candidates. We're given the marks and the frequency of candidates. So the first question says, find the probability that a random selected candidate scored more than 54% in the exam. All right, so I think the first thing we need to do here is to try to understand some things. Try to understand what the examiner is saying to us in this question. What do we want to achieve from this question? Okay. So we're given our marks to be in percentage and our frequency of candidates to be this. So I'll just create a new column here. Just permit me to use this table to do our calculation. So I'll just come here and put, this is actually a question under measure of center tendency, where we use the group data format. You know, we have two types. We have the group format, we have the group data and the ungroup data. This is the group data because it's well categorized. So what we need to do here is just to get the cumulative frequency. Cumulative frequency. So cumulative frequency. So the first number is what? 3. 3 plus 10 will give you what? 13. 13 plus 21 will give you what? Student of mathematics, 34. 34 plus 33 will give you what? 37. 37 plus 20 will give you what? 57. 57 plus 8 will give you what? That is 67. No. 3 plus 10, 13, 13 plus this, 34, 34 plus this, 37, 37 plus this, give you 57. Then 57 plus 8 will actually give you 55. Is this 8 or 80? Thirty-four, 34. Oh, okay. Yeah, so this is where the error is. Okay, so 34 plus 33 will give you what? 67. 67 plus this will give you 87. 87 plus 8 will give you 95. And 95 plus 5 will give you what? 100. We're clear, right? Alright, beautiful. So the next questions now says, find the probability that a random selected candidate scored more than 54% in the exam. So the first question says the probability that the max is greater than 54. So if we now go back to our table and go and check, that max that is above 54 should be considered. So looking at here, then our last number is what? 54. We have 55, 67, 64, 65 to 74, like that. So you start your selection from this line, which is what? So we should get the number of candidates whereby their marks are more than 54. So that will be 33 plus 20 plus 8 plus 5. So that gives us what? Divided by 100. $66 divided by 100. So that gives him what? Using a calculator, 0.66. So this is the probability that the number of candidates that scored above 54 is what? 66% out of the total 100%. And this is 6% of candidates actually scored above 100, above 54 rather. Okay. So the next question says find the probability that a random selected candidate scored between 45 and 75%. A random selected candidate scored between 45 and 75%. So we need to go back to our table and check the one that scored between our target is what? I'm coming question 2. Probability that the marks are between 45 to 75. So our selection will be from that period. 45. Okay, between exact. So our selection starts from where? 21 is part of it, 33 and 20. Yes. So that's the three number of candidates within that selection. Okay, thank you for that. Plus 20. So some people will ask, or some students are going to ask that, are we going to divide this by 100? Yes, you're going to divide it by the total number of candidates because we are asked to calculate the probability of why that existed. So divided by 100. So that gives us what? Do your calculation, 74 divided by 100. So for my own end, I have 0.74. Please get a functional calculator like I said, because some calculator might do something wrong. Thank you. So the next question says, obtain the cumulative frequency of the mark distribution above. Oh, I think we've actually done that. The cumulative frequency is actually 100. This is the column. For the purpose of the exam, please, once you are given this question like this, go to a new page, make sure you draw a diagram, a table, the table format like this, where you have your marks. This is going to be there. Please hold on. Your marks is going to be there. Your frequency, number of candidates will be there. And your cumulative frequency, this is one mark on its own. Cumulative frequency is another mark on its own. So you will get your full answer for having construct the table again. So don't just look at the table like that, construct it again. So our cumulative frequency according to the question. So what you will say after calculating is the cumulative, because examiner like student to be specific, frequency is 100. Okay. All right. So I think that's that on that question. So like I said, this is not a substitute for what you've learned so far. It is a reminder that you need to study more. You've not studied more, and there's more expected of you as a student. So please, uh, I would try to tell you all that please go back to your books, do as much questions as you can. This live class is just to open your eyes and make you aware that you've not studied enough, that you need to go into more details about your course. And please, in doing that, please use the right material, the right resources, and manage your time well. All right, so I want to thank you all for being with me throughout the class. It was nice, and bye for now. Good luck in your exams. And please, if you have any question, if you have any comments, throw them in the chat box. Our admin technical team will actually look into that for you. Thank you very much, and have a nice day. So the link to our Telegram class will be posted online. You can share the course to your friends and family and loved ones. Thank you. All right.